Hi everyone! In this video, we will be summarizing the content of PAS 10, Chapter 12 of this book, The Conceptual Framework of Accounting Standard. It will focus on the events after the reporting period.
First, we will be tackling about what the Philippine Accounting Standard 10 prescribes. First, when an entity should adjust its financial statements for events after the reporting period. Second, the disclosure that an entity should give about the date when the financial statements were authorized for issue and about events after the reporting period. Events after the reporting period are those events that are favorable and unfavorable that occur between the end of the reporting period and the date when the financial statements are authorized for issue. And there are two types of events, which are adjusting events and non-adjusting events. Adjusting events are those that provide evidence of conditions that existed at the end of the reporting period, while non-adjusting events are those that are indicative of conditions that arose after the reporting period.
Note that in the events after the reporting period, the going concern assumption is not appropriate. Therefore, an entity should not prepare a financial statement on a going concern basis. Say for example, if a business indicates after the end of the reporting period that it intends to liquidate the business or cease trading. First thing to do is to determine when the event happens in order to say if the PAS 10 will apply or not. Events of the reporting period are those that occur between the end of the reporting period and when the FS or financial statements are authorized for issue. The date of authorization for issue is usually taken to be the date when the BOD or Board of Directors authorizes the issue of FS. Say for example, is a timeline below. Let's say that the reporting period ends on a period of December 31, 20x1 and the accountant completed the FS on January 31, 20x2. Then, they submitted it to the BOD and the latter approves it in February 15, 20x2. Afterwards, the FS then submitted to the shareholders for approval and approved by them on February 28, 20x2. So here, you need to assess the events that happened between the end of the reporting period and the date of BOD's approval, because this is the date when the FS are authorized for an issue. Therefore, the shareholders' approval is not necessary because it is already authorized by the board. Let's say there's a sudden fire on February 16, 20x2. The PAS 10 does not apply because the event did not happen in the required time frame, and that is the end of the reporting period and the date of the BOD's approval.
Now, let's proceed to the type of events after the reporting period. We have here the adjusting and non-adjusting events.
Adjusting events are those events that provide further evidence about conditions that existed at the end of reporting period. Accordingly, an entity must adjust the amounts recognized in the FS. So let me provide some examples for this event. Let's say a settlement after the reporting period of a court case for some reasons. This settlement confirms that you have an existing obligation at the end of the period and you should make a revision in the adjusting entries. Another one is a detection of fraud or errors after the reporting period that may indicate the FS to be misstated. So here, the FS may be adjusted to reflect accounting for those frauds that relate to the present or prior reporting periods. And also, the bankruptcy of a customer that occur after the reporting period which is in need also to adjust.
Non-adjusting events are those that are indicative of conditions that arose after the reporting period. To elaborate it, an entity shall not adjust the financial statements in respect of those events after the end of reporting period that reflect conditions that arose after the end of reporting period. Some examples for this event are destruction of a major production plant by a fire. In this case, the entity should not be adjusted to account for the impairment loss that arose after the end of reporting period. Another one is commencing major litigation arising solely from that event that occurred after the period. It should not also be adjusted if the existence of liability is not indicated at the reporting date and shall not therefore trigger the recognition of liability in the financial statements. And then, entering into significant commitments or contingent liabilities, for example by issuing guarantees. The nature and estimate of the financial impact of material non-adjusting events shall be disclosed in the financial statements. Non-adjusting events are considered material if they could influence the economic and financial decisions of the users of financial statements.